Good afternoon and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, February 23rd, and we are 1 day away from the PCE data print that is coming out tomorrow. We did get the GDP print today, I guess the revised GDP print for Q4, and that came in slightly less than expected, which was something we discussed earlier in the week, and we did get some downside volatility because of that. Just to go ahead and check the numbers. For some reason, this chart has been slow to update. Here we go. It is updated. So the expected number was 2.9%, came in at 2.7%, so slightly revised down. Not too big of a drop, obviously, 2.7% still a good GDP number at the end of the day, but seeing it revised down certainly did not impact the markets positively. And so we are, sitting right around the lows of yesterday and are in a very precarious position for equities, in my opinion. So starting with the dollar, which we normally do, as predicted, it has been creeping higher. Just judging by what we saw last time, and of course we do have PCE tomorrow, so this could certainly come in by tomorrow, but I'm kind of expecting a bit of a swing failure pattern. The dollar's definitely had a strong rise, many such days, pretty much since the start of February, been on a strong rise. It's now at the estimated 200 moving average on the 1 day chart, which does coincide with resistance. And then if we look down at the 4 hour, coincides with that resistance level. And we also had the swing failure pattern higher, above the estimated 200 moving average last time. We are above it on the 4 hour, but, I wouldn't be shocked to see kind of this end up being the range. So, we could certainly close above it and hold 105 and move higher, but I kind of would expect something like a swing failure pattern to shock markets, in kind of both directions, especially depending on how PCE prints tomorrow. Something I'm looking for, but do be warned, we could potentially be rejected at 105, or we could flip 105 into support. But swing failure pattern does seem likely given previous events and where we're at now. So looking at equities, we can see that, my magic number for the TTC community this morning was 39.90. We are obviously well below that. Could certainly still form some bullish divergence here. We do have, rising potential RSI trend with downward price trend. So something to look out for there. But obviously, we still have, an hour and a half left in this 4 hour candle and a while to go to the next one print. So verdict is still out on that. But in my opinion, would be preferable to reclaim 39.90. Else you will probably end up seeping down to 39.30. Looking at Bitcoin, obviously holding up extremely well compared to equities. Definitely not technically a sweep of yesterday's lows. Not exactly a lower low, but definitely downward price action. Whereas Bitcoin has, we did have that drop this morning, but still higher than the previous low from Wednesday, which is something you want to see if you are continually bullish. So. Magic number for today for Bitcoin, right around 23.9. Of course, judging for any bullishness, we need to get above 24K, which is the estimated 200 moving average, and 24.2, which is the previous daily close. And obviously 24.5 or anywhere from 23 to 24.5 will be a resistance as well, considering that's where the VWAP is. So definitely some resistance to take note of if you are bullish, but each of these is a small level to reclaim for continued bullishness. So you have three significant levels to claim if you are bullish from this price, and three potential resistance areas if you are bearish. So I do think that as long as equities don't, we basically had a sweep of yesterday's lows. So as long as we don't go below yesterday's lows, there's still possibility that we can, potentially reclaim the previous daily close around 4K or higher. So in that case for Bitcoin, probably reclaiming 24K or higher in that scenario. And considering, we didn't exactly sweep Wednesday's lows, but we met Wednesday's lows. And are now defending above that price area where these wicks are. So definitely something positive there for Bitcoin. But of course, need to break above 24, need to break above 24.2, need a break above 24.3. So going to be tough for that, but there's definitely a chance. For Ethereum, we are more or less exactly where we were when we spoke yesterday. Actually, we were a little bit lower, towards 1600. So we are above that. The longs that we predicted, if you wanted to place them when we spoke yesterday, certainly came to fruition. So that's a good sign there. But of course, weekly VWAP still resistance, but estimated 200 moving average is holding along with 1650 support. So get above 1650, reclaim the VWAP. You're heading to 1680 or higher. Stay below 1650 and end up closing below previous daily close, which is 1640, and you're probably creeping back lower towards the lows. So moral of the story is, Ethereum, a little bit easier to judge, in my opinion, just based on where it's at in terms of confluence of support and resistance. Starting to coil here, large move is coming in one direction, whether you like it or not. It's just, is it going to be bullish or is it going to be bearish? And of course, for bullishness, preferably break above the weekly VWAP, see a lot of movement above typically. So same goes for Bitcoin. Ideally, break above the weekly VWAP. You got a lot of room to roam up there. That's probably dependent on equities not dying, below yesterday's lows. So if equities, close below equities, or if equities close below Wednesday's lows, that's probably going to be a bad sign for everything. As long as we can stay above yesterday's lows for this 4-hour close, which is going to take, like I said, another 80 minutes, I would consider that to be a pretty good thing. And as long as DXY is slowly moving rather than moving with large candles like we mentioned earlier in the week, then we should not expect too much volatility directly from DXY movements. So again, cautiously optimistic. If you were, very similar to yesterday, if you were to place longs, not a bad place to do it. But the main target, in my opinion, get above the weekly VWAP, and good things will likely come. So good luck, happy trading. And oh, hold on, we have a request. Can we have TA on Flux? Okie dokie, let's check out Flux. Get up to the daily. So we are above the estimated 200 moving average. Daily wick lower. Tag the estimated 200 moving average back up to the VWAP. Now underneath the VWAP. Is that correct? Yeah, hovering right around the weekly VWAP. Still above estimated 200 moving average in the 4-hour. Let's see what trend line we have here. This is more or less valid. And then we have something like this. Zoom out a little bit. We are sitting right at where you would expect some resistance. This flat open right here. Yeah, so you basically have, there you go. So, you basically have a symmetrical triangle. These can typically break lower or higher. It's very 50-50, but usually we'll continue with momentum. We're sitting right above the, the direct center of that range. Coincides with the highs of October, as well as the lows of August. And, definitely a tough read here. Let's zoom in on the 4-hour. So, ideally it stays above, 82 cents, 82 and a half. Previous daily close, it's holding above is 83 and a half, and VWAP is sitting right around 84 and a half, 85. So in an ideal world, this reclaims the VWAP and then breaks higher. But we do know, just based on how this pattern rolls, you could see something like this until it either does that or does that. So, and that is heading into March. So that's, 5 more days of trading, more or less, heading into March. So I would more or less expect something, within this. Maybe you have something like this, maybe you have something like that. But if I was a Flux trader, I would probably, the best bet would be, confirm break above the VWAP and try and play that. And then if you get cut at resistance, big wick again at resistance like this, then you sell and try and buy back lower. Unless you bought back, unless you bought in early January, if you bought in late January, I should say, then you should be able to chill out and trust the trade if you are generally bullish. If you bought in after that, if it wasn't in mid February where you're buying near the lows, then I would definitely be very cautious and make sure that you have proper stops in place for the trade. And of course, if you bought back here, I would also, set stops regardless, because you're in profit. So you should probably either secure profit and set stops lower, or just set stops a little bit lower so that you can always walk away with profit in case things go bad and, capture whatever upside is available. So probably just going to ping pong around, but, look for, swing failure patterns at the extremes, as that could be a potential fake out. CRV. So actually CRV is something that I have been interested in trading in. I took a small position yesterday, just due to the stablecoin narrative, as well as the fact that USDC, any FUD in relation to the top stables that we have, CRV should be a winner just due to their DeFi operational structure. So CRV kind of has a two-pronged narrative here in terms of both the stablecoin and any positive impact from FUD around stablecoins. So looking at CRV, I think the easiest thing you can look at is, nice little double tap here above the estimated 200 moving average. As you can see here, estimated 200 moving average was pinnacle support for the move higher into mid to late February. If we kind of zoom out a little bit on the 1 day, you can see that price is hovering, just around the top edge of, the previous range. And of course, still above the estimated 200 moving average on the daily. Now, of course, the main worry is, it hasn't really tagged the 200 estimated 200 moving average, and, RSI didn't fully reset. Neither of those really need to happen. It is below the previous daily close, and it is pretty far off from the current weekly VWAP. But again, it is sitting in the top half of this range. And that's, if you're looking at it from a range perspective, which I did have ranges drawn, I don't know why they disappeared on me. But if I'm looking at it from a range perspective, what's the easiest? A lot of wicks here. So let's see what we can find. This honestly, the previous daily close does offer a really good trend line, in my opinion, for this range. We can probably throw that right there. Yep. So basically, this is your range. Everything above it is deviation. Everything below it is also deviation. So deviation, 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 main range. So we're in the top half of the main range, above the estimated 200 moving average, but we are below the weekly VWAP. So what you'd probably want to buy, and I bought a reclaim of up here. So I entered around 111, so I'm slightly down, but I'm thinking of entering a little bit more right after this, just based on this bounce. Reclaim the kind of 111 area, then you can start moving higher. And if you reclaim the weekly VWAP, then just based on weekly VWAP reclaims, especially after busting under it, should continue to ride that strong, as well as provided, the macro markets, are moving in the direction that we want them to. So Bitcoin's not tanking, ETH's not tanking, maybe equities is, but it's not, at the speed or veracity that it's moving crypto negatively. So in my opinion, as long as CRV recracks 111, it's bullish. But what you want to look out for is that VWAP, or the weekly VWAP, that's going to be around 116, 117 by the time it makes it up there, if it does. So if we can get above that weekly VWAP, then you've got a nice little, precipice to continue to move higher. And that's something that I'm personally looking for as well. CRV and LDO are two coins that I'm, looking at it from the altcoin perspective. And, I think the good thing is, in relation to that, is, this is what we want to see. We mentioned this yesterday, and that it would probably end up continuing, down, probably lower to the end of the range, slightly wrong there, but this is what we want to see. If you're bullish on alts, this is the trend that you want to see, is ETH BTC holding this demand zone that we drew, nearly a month ago, and that moving up higher towards the estimated 200 moving average. Because when ETH BTC is moving stronger, that basically what it's telling you is that Veracity is moving positive. Oh, I think Veracity is a token as well, isn't it? Confirm or deny that in the chat if you want. It does sound familiar. I don't know why that exact term came to my mind, but when ETH is moving stronger than Bitcoin, ETH is moving, at a higher rate of return than Bitcoin in the market. And that if ETH is moving stronger than Bitcoin, then alts will typically take that momentum and ride with it as well. So ETH BTC strength signals likely alt strength in relation to Bitcoin as well, provided it continues. So something to look out for there if you are bullish on alts. Obviously, I've not had the best read in the world on this, but the last time we talked about it being in the demand zone, it obviously took about a week, a little bit over a week to get out, but it did. And this demand zone is clearly important because basically, this is the low end of the range. This is the high end of the range. Deviation, possible deviation here. So something to look out for there. Good luck and happy trading. So that closes it out for this session. If you're not in the Trade the Chain community, you're missing out on all the juicy stuff. And of course, if you have further questions, you can always ping me for charts and outlooks and analysis in the Trade the Chain community. I always do majors and equities and other top cryptos that are trending every single morning and follow it up with analysis in the afternoon. So please let me know if you'd like that type of analysis in the TTC community. Else, I will see you tomorrow. And please also remember PCE tomorrow, 8:30 a.m. Fed's preferred inflation metric. Pretty much every data print has had volatility in the hours around the release of the data, and then the momentum is chosen. So don't be completely scared by whatever volatility you immediately see around it. We have, remember CPI was not exactly what we wanted it to be, but then crypto had a quick volatile moment and then moved higher. So, I don't think that tomorrow is going to be the end all be all for any momentum, but it is important to consider if inflation is super off base, meaning it comes in as a huge miss, that could really impact markets. If it's a small miss, maybe it's a lot of volatility, momentum continues. And then if it's a beat, maybe small volatility and momentum continues. If it's a big beat, then you have massive moves. So I'm thinking, massive moves are going to come with a extreme data prints. As long as we're floating around expected, I'm not expecting things to be too bad once the volatility washes away. So good luck. Happy trading. See everybody tomorrow.